Good morning. As the sun rises on a new day, the business world is waking up to some truly remarkable news. Today, on the very last day of 2025, BP has announced a game-changing deal that could impact not just the company, but potentially the car you drive and the future of the automotive industry itself. BP is selling a 65% stake in its iconic Castrol lubricants business to U.S. investment firm Stonepeak for about $6 billion. A move that's sending shockwaves through the energy and automotive sectors. Rather than a full exit, BP will keep a 35% stake, forming a powerful joint venture with Stonepeak. This means BP remains closely involved in Castrol's direction, while bringing in fresh capital and new perspectives. This partnership lets BP cash in now, while still having a say in Castrol's future. It's a strategic move, balancing immediate financial gain with long-term influence. The total value of Castrol in this deal is pegged at around $10.1 billion. But after accounting for debt and other obligations, the real-world value is closer to $8 billion. It's a complex transaction, reflecting the true worth of a global brand. The Canada Pension Plan Investment Board is also investing over $1 billion, showing big confidence in Castrol's future. Their involvement signals that major institutional investors see long-term potential in this partnership. BP's main goal with this cash: pay down its hefty debt and strengthen its financial health. By reducing its liabilities, BP is positioning itself for greater stability and flexibility in the years ahead. About $800 million will also go to shareholders through increased dividends. This is a welcome boost for investors, rewarding their loyalty and confidence in BP's evolving strategy. This is BP's biggest move in years, signaling a major shift in strategy. It's a bold step that could redefine the company's future and reshape its role in the global energy market. The deal is expected to close by the end of 2026, after regulatory approvals and final negotiations are complete. For BP, it's a pivotal moment, trading part of a reliable business for immediate financial flexibility and a chance to refocus on new priorities. For Castrol, it's the start of a new era under joint ownership, with opportunities for innovation, expansion, and growth in a rapidly changing market. The world will be watching to see how this partnership shapes the future of both companies and what it means for the broader energy and automotive industries. Stay tuned for what this means for drivers, investors, and the global energy landscape. The story of BP and Castrol is far from over, and the next chapter could be the most exciting yet. Castrol is more than just a familiar logo on a bottle of oil. It's a name that's become synonymous with performance, protection, and innovation in the world of lubricants. It's BP's lubricants division and a global leader, trusted by mechanics and car lovers for over a century. Whether you're a professional technician or a weekend tinkerer, Castrol's reputation for quality is hard to miss. Castrol's products keep engines, machinery, and even spacecraft running smoothly. From the family car to the most advanced industrial equipment, Castrol's lubricants are engineered to meet the toughest demands. Founded in 1899, Castrol built its reputation through motorsports innovation and high-performance products. Its oils have powered record-breaking races and legendary vehicles, cementing its place in automotive history. When BP acquired Castrol in 2000, it became a crown jewel, steady, profitable, and less volatile than oil and gas. The acquisition gave BP a powerful brand with deep roots and a loyal customer base. Castrol's business is cash-generative and doesn't require huge investments to keep going, unlike drilling for oil. Its operations are efficient, and its products are always in demand. Its global brand power allows it to command premium prices and customer loyalty. People trust Castrol to protect their engines, and that trust translates into strong sales worldwide. For BP, Castrol has been a financial anchor, providing stability amid energy market swings. In a volatile industry, Castrol's steady performance has been a reliable source of profit. The brand's reach extends far beyond cars, touching industries worldwide. From factories to shipping ports, Castrol lubricants are essential to keeping the world moving. That's why selling a majority stake is such a headline grabber. It's not just a business move, it's a shift that could reshape the entire lubricants market. Castrol isn't just a motor oil company, it's a symbol of innovation and reliability. Its research labs and racing partnerships continue to push the boundaries of what lubricants can do. Its sale marks a turning point for BP and the broader lubricants industry. The decision will have ripple effects for competitors, customers, and the future of automotive technology. The world will be watching what comes next for this iconic brand, as Castrol's legacy continues to evolve in a rapidly changing industry. So, who exactly is Stonepeak, the firm making headlines by spending a staggering $6 billion on Castrol? Let's break it down. Stonepeak is what's known as a private equity firm. That means they gather large sums of money from institutional investors, think pension funds, insurance companies, and wealthy individuals, and use it to buy companies. Their goal? To improve these businesses, boost their value, and eventually sell them for a profit, often after several years of hands-on management. But unlike the world of flashy tech startups or trendy consumer brands, Stonepeak focuses on the backbone of the economy, essential infrastructure. This includes things like pipelines, power plants, and now, the lubricant industry. They seek out businesses that are stable, generate steady cash flow, and are crucial to everyday life, like Castrol, which has been a trusted name for generations. For Stonepeak, Castrol represents a global leader in a vital industry, one that keeps the world's machines running smoothly. As long as engines and machines exist, lubricants will always be in demand, making Castrol's business model resilient and future-proof. Stonepeak's strategy is straightforward: acquire strong, established assets, make them more efficient, and position them for long-term growth before selling at a higher value. As a private owner, Stonepeak isn't tied to the short-term pressures of the stock market. This gives them the freedom to invest in new technologies, expand into emerging markets, or streamline operations for greater efficiency. Castrol fits perfectly into this approach, a reliable, globally recognized brand, with plenty of untapped potential for growth and innovation. Stonepeak sees Castrol not just as another company, but as a piece of critical infrastructure that supports industries worldwide. Their bet is simple: with focused investment and strategic management, Castrol's value and influence will soar to new heights. For Castrol, this marks the beginning of a new chapter, one driven by private equity's relentless pursuit of growth, innovation, and operational excellence. The world will be watching closely to see if Stonepeak can unlock even greater potential from this century-old brand and redefine what's possible in the lubricant industry. If Castrol is so valuable, why is BP selling? The answer: BP's new leadership is shifting strategy. After years of chasing green energy, BP is refocusing on its core, oil and gas. The company wants to simplify, cut debt, and boost profitability. That means selling off non-core assets, even successful ones like Castrol. BP aims to divest $20 billion in assets. The Castrol sale gets them more than halfway there. High debt, around $26 billion, has been a major concern. The $6 billion from Castrol will help BP hit its debt reduction targets and strengthen its balance sheet. It's a trade-off, giving up a steady earner for immediate financial relief and a sharper focus. For BP, it's a bold move to reset its future. Let's break down some key terms behind this deal. Private equity investment firms that buy companies using money from private investors, aiming to improve and resell them. Divestment: when a company sells off part of its business, like BP selling Castrol, to raise cash or refocus. Joint venture: two companies team up to run a business together, sharing risks and rewards. Here, BP and Stonepeak will co-own Castrol. Enterprise value: a company's total worth, including debt and cash, not just its stock price. In this deal, Castrol's enterprise value is about $8 billion, reflecting its true cost to buy. These terms help explain why BP is selling, how Stonepeak is buying, and what both hope to gain. Understanding the language of deals makes it easier to see the strategy at play. For BP, it's about cash and focus. For Stonepeak, it's about growth and returns. For Castrol, it's a new era under joint ownership. And for everyone else, it's a lesson in how big business reshapes the brands we know. Is BP's Castrol sale a smart move or a risky gamble? Supporters say it's a win. BP gets cash to cut debt and sharpen its focus on oil and gas. The deal signals serious intent to investors and could boost BP's stock. Critics argue BP is giving up a reliable, low-risk cash generator. Castrol's steady profits helped buffer BP from oil price swings. Without it, BP's earnings may become more volatile and dependent on unpredictable oil markets. Some worry this short-term fix could hurt BP's long-term stability and dividend payouts. The debate: is immediate debt relief worth losing a stable, profitable business? BP is betting on a leaner, more focused future. Only time will tell if this trade-off pays off. What does this mean for everyday drivers and customers? In the short term, not much will change. Castrol oil will still be on store shelves, and BP gas stations remain unaffected. The deal is about corporate ownership, not the products you buy. Stonepeak and BP want Castrol to keep running smoothly and keep customers happy. Over time, Stonepeak may invest in new products, especially for electric vehicles, or expand Castrol into new markets. There could be tweaks to pricing or marketing, but competition should keep things in check. For now, Castrol's brand and quality aren't going anywhere. It's simply entering a new phase, with fresh opportunities for innovation and growth. With Stonepeak as majority owner, Castrol is entering a new era. For the first time in decades, it will operate with more independence from BP. Stonepeak will treat Castrol as a primary investment, giving it focused attention and strategic direction. BP's 35% stake ensures some continuity and support during the transition. The joint venture combines Stonepeak's financial muscle with BP's industry know-how. Castrol's big opportunity: adapt to the rise of electric vehicles by developing new e-fluids and technologies. The pressure is on to innovate, expand, and deliver strong returns. Castrol must balance serving its traditional customers while pivoting to the future. It's a challenging but exciting road ahead for this iconic brand. The next chapter for Castrol starts now. The Castrol sale is a turning point for BP, but the story isn't over. BP is now closer to its $20 billion divestment goal and has fresh cash to cut debt. Expect more asset sales as BP streamlines and doubles down on oil and gas. The big question: how will BP balance investor demands for returns with global pressure to address climate change? New CEO Meg O'Neill must craft a strategy for both today's profits and tomorrow's low-carbon world. The industry is watching BP's next moves closely. The Castrol deal gives BP the firepower to make bold decisions. The next chapter for BP and the energy world is just beginning.